Hello everyone. As the end of the year creeps up on us, it's the perfect time to talk about taxes. Exciting, right? Okay, maybe not exciting, but definitely important. So in this video, let's break down all the key updates for the 2025 tax season in Canada. We'll talk about tax brackets, investment accounts, CPP, EI, and even that trending GST, HST holiday gift from the government. Now, before wasting any time, hit the subscribe button if you're serious about taking control of your finances. It's free, unlike the taxes we're about to discuss. Okay, so let's start with the tax brackets. In Canada, we have progressive tax system, meaning your tax rate increases as you earn more income, but it doesn't apply to your entire income, just a specific portions of it. Now, here's a quick example. If you earn $60,000, you won't pay the same rate on all of it. Instead, the first $55,867 will be taxed at 15% federal tax rate, and the remaining $4,133 will be taxed at 20.5% federal tax rate. So getting a raise won't suddenly throw all your income into a higher tax bracket. That's just a myth. Embrace the raise. Now here are the 2024 federal and Ontario tax rates on the screen. Pause the video to have a look at these. For details on your province's rates, I have added a link in the description. Provincial tax system varies, so it's important to stay informed, so check out that link. Now let's talk about the deadlines to keep in mind. If you're an employee, you need to file your taxes by April 30th, 2025. If you're self-employed, your filing deadline is June 16, 2025, but if you owe any taxes to CRA, that must still be paid by April 30 to avoid interest charges. And trust me, CRA's interest rates are no joke. They are high and they add up fast. Now, tax brackets are adjusted annually to account for inflation, which averages around 2.5%, but for 2025, the federal tax brackets are increasing by 2.7%. I'll put the new federal tax brackets on the screen again. Pause the video to have a look. In Ontario, the personal tax credit amounts and most tax brackets are increasing by 2.8%, except for the $150,000 and $220,000 brackets, which remain unchanged. To sum it up, the adjustment aims to provide some relief, but make sure to check your province's specific updates. Taxes are not fun, but knowing the rules can help you keep your hard-earned cash. Next up is the basic personal amount, or BPA, the income you can earn tax-free before the government steps for its share. In Canada, there is one federal BPA and individual provincial BPAs, which vary by province. In 2024, the federal BPA was $15,705, and for 2025, it's increasing to $16,129. This means you won't pay any federal taxes on the first $16,129 you earn in 2025. But here's the fine print. The full BPA applies only if your income is below or equal to the point where 29% federal tax bracket begins. For 2024, that threshold was $173,205, and in 2025, it's increasing to $177,882. If your income falls within 29% bracket, the BPA starts to gradually decrease. For those earning in the 33% bracket, your BPA drops to the minimum amount, which is $14,156 in 2024 and $14,538 in 2025. Now let's talk about RRSP, your best friend when it comes to retirement planning and saving on taxes. Your RRSP contribution limit changes based on your income. Essentially, the more you earn, the larger your contribution room, up to a fixed maximum. For 2024, the contribution limit was 18% of your previous year's income, or $31,560, whichever is lower. In 2025, that maximum is increasing to $32,490. Now here's how it works. You can contribute to your RRSP until Feb 29, 2025, and those contributions count toward reducing your 2024 taxable income. In other words, you'll pay less in taxes for 2024. It's a win-win situation. You're saving for retirement while keeping more money in your pocket now. If you've got unused RRSP room, this is the time to take advantage of it. Let's move on to the TFSA. One of the simplest ways to grow your savings tax-free. For 2025, the annual contribution limit remains same as 2024 at $7,000. Unlike RRSP, the annual limit is universal, so everyone gets the same contribution room regardless of the income. Now here's the key. Your TFSA contribution room starts the year you turn 18, or for someone like me, the year you become a Canadian resident, temporary or permanent. For example, if you turn 18 or moved to Canada in 2019, your total TFSA contribution room for 2025 would be $44,500, assuming you haven't contributed anything yet. And if you haven't started contributing to your TFSA yet, well, what are you waiting for? This account lets your money grow tax-free, whether through interest, dividends, or capital gains. So if you can max it out each year, it's one of the smartest financial moves you can make. Next on the list is RESP, the Registered Education Savings Plan. This is a long-term savings plan designed to help you save for a child's post-secondary education. Whether that's for college, university, trade school, CEGEP, or even apprenticeship programs. The best part, even adults can open an RESP for themselves. For 2025, the maximum educational assistance payment threshold, or EAP, has increased from $28,122 in 2024 to $28,881. An educational assistance payment, or EAP, is the money withdrawn from an RESP and given to the beneficiary to help cover the expenses of the post-secondary education. Now, the RESP is a huge topic. First of all, it's mouthful, and I could easily spend an entire video talking about it. So let me know in the comments if you would like me to dive deeper into it, because there's a lot to unpack here, from contribution limits to government grants. Moving on to the Canada Pension Plan, or CPP, the contribution rate remains same in 2025 for both employees and the self-employed. Employees contribute a 5.95% of their income and their employer matches that amount. However, if you're self-employed, you pay both parts of the contribution, which means a total of 11.9%. For 2024, the contribution limit for employees was up to $3,867.50, but in 2025, it has increased to $4,034.10. For the self-employed, the contribution limit has gone up from $7,735 to $8,068.20. Now let's talk about CPP2, which is an enhancement to the existing CPP. This applies to individuals who earn more than year's maximum pensionable earnings, or YMPE, but less than year's additional maximum pensionable earnings, or YAMPE. For 2024, if you earned between $68,500 and $73,200, you and your employer each contribute an additional 4% of that income to CPP, up to a maximum of $188. For self-employed, you pay both contribution, which means 8% up to a maximum of $376. In 2025, the YMPE has increased from $68,500 to $71,300, and the YAMPE is now $81,200 from previous $73,200. As a result, the gap between the two has widened, and so has the contribution limit. For 2025, the extra CPP contribution is $396 for employers and employees and $792 for self-employed. In short, CPP allows for higher contributions on higher earnings, which means bigger benefits down the road, but also a little more taken from your paycheck now. Anyways, let's move on to the next one, which is employment insurance, or EI. The EI premium rate for 2025 has decreased slightly from 1.66% in 2024 to 1.64%. However, the maximum annual EI premium has gone up from $1,049.12 in 2024 to $1,077.48 in 2025. Additionally, the maximum yearly insurable earnings have increased as well. In 2024, it was $668 per week, and for 2025, it's pumped up to $695 per week. So while the rate itself has dropped a little, the total amount you can contribute has gone up due to the increase in insurable earnings. It's a good idea to keep track of these changes, especially if you are near the income limits. Last but definitely not least, we have the GST HST holiday break from the government. From December 14, 2024 to Feb 15, 2025, there will be a tax break on eligible items, including things like children's clothing, toys, games, books, and food and beverages. The best part, as a consumer, you don't need to do anything or apply anywhere to take advantage of this. If you make any eligible purchase, you'll automatically pay no GST HST. Now, I don't know how much you're gonna save, especially on groceries, since in Ontario, we don't pay taxes on most of the groceries anyway. But yeah, it's great time to stock up on some essential stuffs or grab some gifts without paying some extra tax. Now, I get it, taxes might not be most exciting topic, but understanding them is crucial for keeping more of your hard-earned money. Now, if you've been struggling to manage your budget, watch this video where I'll walk you through how I automate everything so I can focus on the important stuff without sweating the small financial details.